Hey guys, Matt Paulson here. I was thinking the other day that everyone gives themselves labels to kind of describe who you are to the world. I happen to be a Christian, and that means something. I'm a father, I'm a husband, and that means something. I'm an entrepreneur, and that means something. I'm a cyclist, and that means something. I'm a watch enthusiast, and that means something. And one of the labels that I've kind of always is kind of automatically ascribed to myself until pretty recently was the word startup founder. I'm a startup founder. That's one of the things that I am. And I was having a conversation with John Meyer from London Lee about startups a while back, and I honestly can't remember all the details about the conversation. But John made an offhand remark and said, "Well, honestly, I don't know if I'd call MarketBeat a startup anymore. It's probably just a business now, right?" And that conversation really got me thinking. Is MarketBeat still a startup? When is a startup no longer a startup? When does a startup just become a normal business? And I did a lot of thinking to try to answer this question. And I'm pretty sure John was right that MarketBeat, really is not a startup anymore. So in this video, I kind of want to walk through the line of thinking that helped me determine that MarketBeat is probably now just, a business, and talk about some of the reasons that, when is a startup no longer a startup? When does a startup become a business? So I founded, American Consumer News LLC, which is the holding company for MarketBeat, in 2008, and I actually started the business a couple of years before I incorporated. And yeah, the business model has changed a couple of times since I first started a personal finance blog in 2006. But really, MarketBeat as a company is really probably about close to 13 years old. Initially it was a personal finance blog, and then it was a network of personal finance blogs, and then it was a conglomerate of internet businesses, and then it was a conglomerate of kind of financial internet businesses, and then it kind of became the model, kind of the current business model of MarketBeat, but it was called Analyst Ratings Network until about 2015, and then we changed the name to MarketBeat, and honestly the business model hasn't really changed much in the last 5 years now. And my thought is, if the company is at least 10 years old, the company has probably kind of figured out what it wants to be when it grows up, and kind of has a clear business model, which MarketBeat now does, and that business model is really not likely to change much in the future. So I think that is a good sign that my company probably isn't a startup. So when your business has kind of a solid business model, that it works, that's what you're focused on, you're not going to change it, that's a good sign that your startup is now just a business. The second reason that MarketBeat probably isn't a startup anymore is that the company survives off its own revenue and generates a healthy profit margin. So, MarketBeat's never generated or taken any venture capital. For the first couple of years, it didn't make a whole lot of money, but now it makes lots of money. And if somebody came to me and just offered me a strong valuation to invest in the company, the answer would probably be no. And just because I don't need the money, and MarketBeat generates just healthy cash flow, and it just doesn't need outside capital to keep growing. So, I think when a company can consistently live off its own cash flow and continue to grow, even off its own cash flow without any outside investment, that's probably a good sign that the startup isn't a startup anymore and it's now just a business. I don't say just a business because I'd much rather be the profitable business than be in startup mode, not making any money. But that's a good sign. The third reason that MarketBeat probably isn't a startup anymore is that its growth is no longer exponential. In the first few years of MarketBeat, it wasn't uncommon to see growth rates of greater than 100%. So in 2013, 2014, 2015, our revenue grew by more than 100% per year for those 3 consecutive years. And we've had some healthy growth since then. Our company grew by 43% last year, and we're likely to grow by 20 to 30% this year. But our growth just isn't exponential anymore, and it's unlikely to ever be exponential again. If everything goes well, we'll probably grow by 15 to 30% per year for the next several years, and we'll just have a healthy business. And MarketBeat should easily be kind of a $10 million a year business next year, but it's probably not going to become a $50 million a year business, just given the size and the scope of the industry it operates in and kind of the constraints that I've kind of created for the business. We've had some great growth. It has slowed down a little bit, and that's okay. That's just a good indicator, that we're not in startup mode anymore. We're now just a regular old business. The fourth indicator that we're not a startup anymore is that we have an established brand, and that people in our category know what MarketBeat is and know what it's about. So MarketBeat as a brand might not mean much to children or college students or people kind of really early on in the workforce, but it does mean something to kind of the older generation that's developed some wealth and invest in individual stocks. So from what I've read, there are probably about 40 million people in the United States that own individual stocks, and about 2.85 million of them have subscribed to MarketBeat at one point or another in their lifetime. So MarketBeat really has reached a level of brand penetration with its core audience, and because we have some penetration and we are a well-defined kind of brand and audience to our audience, that's probably a sign we're not a startup anymore. Our brand means something to the people that we're trying to target. It means data, it means information, it means news, it means comprehensive information, it means those types of things to people in our audience. The fifth and final reason that MarketBeat is probably not a startup anymore is that we've kind of stopped doing the things that don't scale, and we focus primarily on scalable marketing strategies. As a company, we know what our unit economics are. Our goal is to pay $1 to $3 to get somebody that's in the United States that invests in stocks to join our email list, and then our hope is that we'll make kind of $7 to $8 over them over the course of about 2 years. So when someone asks us to advertise with them, I usually know ahead of time whether or not it's going to work based off their targeting strategies and what they're asking us to pay for leads. Somebody says, hey, we've got some great leads, they're $6 a piece. I say thanks, but no thanks, because I just know it's probably never going to work. So MarketBeat as a company, we really do have established and proven marketing strategies that allow us to continue to grow. We're kind of past the phase of trying to find growth hacks or just to get a journalist to write about us on a blog or a website or a newspaper. We just don't. It's great when we find a growth hack or when somebody writes about us, but for us to grow, we're kind of past those things, and we just really need to focus on scalable marketing strategies and invest more in them to grow. So that's probably kind of yet another nail in a coffin that we are no longer a startup. So those are the 5 indicators that your startup may no longer be a startup, and those are the 5 indicators that mean MarketBeat probably is not a startup anymore. So if your business has been in business for 10 years, probably not a startup. If it survives off its own revenue, probably not a startup. If your growth has become linear, it's not exponential anymore, probably not a startup. If your business is an established brand and it has repeatable and proven marketing strategies, also probably no longer a startup. So I'm kind of sad that MarketBeat is kind of post-startup mode, and because early on, MarketBeat really worked, and I really grew fast and did well because I was just willing to outwork everybody and try everything and jump on every opportunity and see what worked. I just tried a whole bunch of stuff. I found some stuff that worked, and eventually I kind of figured out the reason MarketBeat is so successful is I figured out how to acquire an email sign up cheaper than just about everyone else, and that really allowed MarketBeat to build allowed us to build MarketBeat into the company that's going to make probably $8-9 million in 2019, and then hopefully $10 million in 2020. So we're not a startup anymore. That's okay, but I hope to continue to kind of capture kind of the I don't know, not really sure what the right word is, but kind of the gumption to keep trying, to keep innovating, and to keep experimenting and just kind of doing everything that we need to do, and just kind of pursuing every opportunity that allows us to grow. So I hope we don't lose that we had in kind of our startup phase, but we're definitely now a business, and that's okay. I think that's it for this video. Thanks for watching.